Have you ever heard politicians or news reporters casually mention that a country is trillions of dollars in debt and wondered, who exactly are they supposed to pay back? Is there some giant bank secretly lending money to entire nations? Are governments borrowing from billionaires, foreign countries, or maybe even from their own citizens? And if the debt is so massive, why doesn't the whole system collapse? Today, we're going to explore one of the most misunderstood topics in economics, national debt. Because despite sounding like a financial disaster waiting to happen, national debt is actually deeply connected to everyday life. So, let's break it all down, right here, on History of Simple Things. National debt isn't a modern invention. Governments have been borrowing money for centuries. In fact, some of the earliest large-scale national debts appeared in Europe during the 1600s and 1700s, mostly to fund wars. Kings and governments needed massive amounts of money quickly, so they borrowed from wealthy merchants and banks with promises to repay them later with interest. One famous example was the British government during the 18th century. Britain borrowed heavily to finance wars and expand its empire. Instead of paying everything immediately through taxes, the government issued bonds, basically official IOUs. Investors bought those bonds because they trusted Britain would eventually repay them. That system became so successful that many modern governments still use a similar model today. Over time, national debt became less about emergency war funding and more about managing economies. Governments now borrow to build roads, fund schools, support healthcare, stabilize economies during recessions, and respond to crises like pandemics or natural disasters. Today, nearly every major country on Earth carries some level of national debt. So, who does the government borrow from? When governments need more money than they collect through taxes, they usually borrow by issuing bonds. Think of a government bond as a formal promise that says, "Lend us money today, and we'll pay you back later with extra interest." People, companies, and institutions buy these bonds because they're considered relatively safe investments. In countries like the United States or Japan, government bonds are seen as some of the safest financial assets in the world because governments are unlikely to suddenly disappear. But here's the surprising part. A huge portion of national debt is owed to the country's own citizens and institutions. For example, pension funds buy government bonds to help fund retirements. Banks buy them because they're stable investments. Insurance companies buy them to store wealth safely. Even ordinary people indirectly own government debt through retirement accounts, mutual funds, or savings bonds. So when you hear that a country owes trillions, a large amount of that money is actually owed internally, to its own population and financial system. This is the part people usually hear about in the news. Yes, foreign governments also buy bonds from other countries. But this doesn't mean one country owns another in the way people sometimes imagine. These countries buy bonds because they're useful financial investments. Governments often hold foreign bonds as part of their reserves, similar to how people diversify savings. Why would another country want to lend money to a foreign government? Because government bonds are generally stable, liquid, and reliable. If you're managing trillions of dollars as a nation, you need somewhere relatively safe to park that money. Still, foreign ownership is usually only one piece of the puzzle. In many countries, domestic investors own the majority of national debt. Governments repay debt in several ways. One method is through taxes. Tax revenue helps cover interest payments and repay maturing bonds. Another method is issuing new bonds to replace old ones. This sounds strange at first, but it's extremely common. Imagine replacing an old loan with a new one before the old loan expires. Governments do this constantly. As long as investors still trust the government and continue buying bonds, the system keeps moving. Economic growth also plays a huge role. If a country's economy grows faster than its debt, the debt becomes more manageable over time. That's one reason economists don't just look at the raw debt number itself. They also compare it to the size of the economy. $1 trillion sounds catastrophic by itself, but for a massive economy, it may be more sustainable than a much smaller debt in a struggling country. So, can a country go bankrupt? Technically, yes. Governments can default if they fail to repay debt. History has seen countries like Argentina, Greece, and others face severe debt crises. But major economies that borrow in their own currency have more flexibility than ordinary people. Unlike households, governments can raise taxes, cut spending, print money through central banks, or refinance debt over long periods. That doesn't mean debt is harmless, though. If borrowing grows too fast, it can lead to inflation, rising interest costs, or financial instability. The danger usually comes not from having debt itself, but from losing investor confidence. If lenders stop trusting a government's ability to manage finances, borrowing suddenly becomes far more expensive. At first glance, national debt sounds like a mysterious mountain of money owed to unknown people somewhere far away. But in reality, it's mostly a giant network of loans connecting governments, banks, investors, pension funds, and even ordinary citizens. A country's debt isn't usually one giant unpaid bill demanding immediate repayment. It's an ongoing financial system built on trust, economic growth, and long-term borrowing. And surprisingly, much of that money is often owed right back to the country's own people. So the next time you hear about national debt reaching record highs, you'll know the real story is much more complicated and much more interesting than simply the country ran out of money. Thank you for watching. If you have suggestions for our next video, feel free to share them in the comments below. We'll be sure to give you an acknowledgement for your contribution. Thank you for joining us on this journey through the history of simple things. Don't forget to like, subscribe, and stay tuned for more stories woven through the smallest details.